All right, this is Tradeco Trader S&P 500 recap technical analysis for April 19th, 2012. Let's go right to the chart. We've got our retracement ranges already in place here to start out the annotation of the chart. The 1074.77 from October, the low, and then the March 30th, 2012, 1422.38 high that obviously has been yet to be breached. Already in place here, we've got the golden retrace at 61.8 and the 50% retrace right around the 1258 area, and the first retrace of the range, ironically enough, is just over that 1292 or just under that 1292.66, the original pop off the 1074.77. But we'll get back to that in a little bit. The first thing that we want to do with this chart that is very curious, to say the least, is to draw a bull channel that basically connects this 1101 low that we had in August that wasn't quite the low that we were going to find at the 1074.77, which busted into bear market. But the curious low is the 1101.54, and we'll extend that up almost exactly, and this is no coincidence, right to that 1271.12 400-day moving average line. Then we'll take the high of that pop off 1101, which is creating the bull channel range to go higher, of 1208.74, and we're going to just extend this channel out like this, and you'll see immediately inside this channel the curious range that the index has found ever since last August, coming up on 9 months or so. Take a look at the bust out here of 1101.50, or rather the bounce off 1101.54 up to 1208. You broke over the channel, but never quite got over what would become a 50% retrace when this final range was created. Then go back down, lose the channel. This is the total washout. You had the big volume that took place, and the total washout there that shows that. And then the move up to the 1292.66, that level is just over the current retrace that's hard to see there, the 1289.59, which would be the first retrace inside this 6-month plus range. That to be a healthy index to go higher, without question, going to have to at least retest that first retrace level. But I don't think that's actually going to be the level that this index holds at. I think we have to move the green line down further here, actually get rid of it at first, like such, and move our green line down and look at the 50% retracement level. And that level looks more like a conducive level because of this 1249.05 and this 1258.07 and so forth. And that also takes out major key moving averages here. As long as the 1219.47 is held, that level being the 600-day moving average, as long as that's held, you can see that we're still in a bullish move up. But getting back to this channel over the last 6+ months, you can see where the index topped out here, and since then this is the key spot on that sell-off where we breached the support to go higher. And as we go through stocks and indexes, without question the market right now is trading on those Bollinger Bands that are highlighted there with the orange neon circle, the 1358.37, the 1392.77, and the 1427.17, which is the top of the band, which is just over the high. You look at the 1392 area, we're under that, but we're still over the 1358.37 area, and that's probably the next level down on this index, making 1392 current resistance. So 1392.77 current resistance, 1358.37 current support. If that level's lost, then what's going to happen here is we are going to breach key support underneath here, and this will be a cascade that'll happen relatively quickly and without too much delay. We will find this index at least down to the first retracement level, which is right around that first high off of that 1074.77. So that's really where I see the index going in the near future, probably over the next 30 trading days or less. And I really believe that 1422.38, the top, is in, and we've got our full range here. One of the things that continues to tell me that's the case is that the volume, especially today on the move down on the index of close to 9 points, was increased, and the high today of the 1390.46 found its way under that middle Bollinger Band, which is what all the big institutions and a lot of big traders, hedge funds, are trading off of, that 1392.77. So let's do a crossing trend on the RSI in the technical indicator here. Give us an idea whether we're going to stay oversold or overbought. So we will look at that, and as we often do with these charts, we can do an extension here to that first line, and then we can take the last time the index in this range on the extension was overbought, and we can do something like this and create a line of right there, and you can see, as I pull that down a little more to get it in the middle of the cross trend. Let's actually change it to green because it is actually holding support right now, and you can see it there. We dipped under it, but we touched it again, and now if 50 RSI is the level between the overbought and the oversold, then you can definitely see that 50 is a sell point. I really hate to say this to the bulls, but I really think that the cascade drop is coming, and not a washout, but just a pullback to test that first retracement area, because the market got so overextended up in here, is in the near future. So let's do one more. Let's take a look actually at the MACD. That's about as bearish as it gets. You can see the MACD here in the indicator. To say that that rolled over is an understatement, and it's still in free fall. So there's no reason to think that support has been held here. The money flows have dropped substantially, and the on-balance volume is starting to dive back down to where this entire rally started to take place. You can see the pattern with that. So one other thing that we can do here is we can take that 1356.48 old high, or actually the 1370.58, and we can cross trend off of that and connect, and you'll see, and again, these lines technically are more than coincidence. You can see that cross trend of that 1370.58 extended down to the end of the chart, puts it right around 1280, and that would be a perfect spot to go under this 1292, go under this 1289, hold this 1271 and get a bounce. And really the best level would be that 400-day moving average at 271.12, or 1271.12 rather, and I really think that that's where this index goes. I think we've got another 100 points or so down on the S&P, and then we can start to potentially make a move up into the elections over the summer. But I really think that that level that we really need to get down to is that 1271.12. So that's what we'll look for over the next couple days. This has been the S&P 500 technical analysis recap for Thursday, April 19th, 2012. Tradeco Trader. More to come.